Our investors should focus to today's 700 billion naira primary market auctions. Now, traders at Axis Bank say the market is recording a bull run following a sharp drop in January's inflation data. Tobechukwu Ikpe, Treasury Team Member at Axis Bank, joins me now for more market movement. Tobe, thanks a lot for joining us on the show today. The market is really digesting the latest rebased CPI data at this moment, and we are seeing that introduce or trigger some bull run here. Talk to us about this.
Thank you for having me, David. So yesterday, following the release of the inflation data, we saw bullish sentiment prevail in the fixed income secondary market. There was buying across all securities from the treasury bills to the bonds, and this led to declines across the curve on the yields as market participants revised their expectations of interest rates going forward. Following this drop in the CPI numbers, now most market participants are expecting the MPC to likely cut rates at their decision later this week. So they are taking advantage of the interest rates at where it is right now, buying before that happens.
And talking about the MPC as well now, before we get into that, let's talk about the expectations around today's primary market auction and likely subscription levels we'll see.
This year, we've been seeing a lot of appetite, a lot of interest in the treasury bills market and the fixed income space, especially for those shorter tenure maturities from both locals, international, and institutional investors. Everyone wants to get a piece of that attractive yield that is in that space right now. So we've seen heavy subscriptions at auctions throughout the year for both NTB and OMO. The last auction stood at about the subscription took about 1.9 trillion for an offer of just 650 billion. So today we have 700 billion offer. We expect to see subscription above 1 trillion again as market participants look to lock in these rates right now while they are still elevated. But we feel that these subscription levels will drive the rates downwards even more as people throw in aggressive bids at the auction. So our expectation is that the rate should come out somewhere between 18.5 to 18%, coming from 20.32 at the last auction before this one.
Yes, and Tobechukwu, as part of the deliberations, looking at today's conversations at the Monetary Policy Committee meeting, which has begun today, now we're definitely looking at the continued Naira stability we have here and also looking at moderation in inflation. I'd like your take on how we've also seen movements in the FX space at this moment and what might likely tilt the balance going forward.
The FX rate has been stable since the beginning of the year at around 1.5, and corporates and individuals alike, FX users, have been largely happy with that, and I'm sure the Monetary Authority is pleased with the way the FX market has been stable and also liquid at the same time. If you want to buy FX today, there are not too many hurdles to cross to access the rate at the FX at whatever rate is available in the market. However, there are still concerns around the yield environment. A lot of this FX stability has been driven by foreign investment into our fixed income space, as foreign investors also look at yields across the world and look at where they can earn a positive carry above the lower interest rate environments in the developed markets. So if the yields continue to drop the way they've been dropping in the last couple of months, maybe a concern for the FX, as we may see some of these foreign investors start to take profits and exit their positions, which may put further pressure on the FX rates. And we may also see lack of fresh inflows into the markets. But the CBN has to keep an eye on the FX rates and to ensure that it's stable. So I'm sure it's part of the considerations they will think about at the MPC meeting on what to do going forward.
Thanks a lot for the updates there, Tobechukwu. That was Tobechukwu Ikpe, Treasury Team Member at Axis Bank.